Well, folks, there's a whole lot going on today. I got to show you. There's some interesting stuff that is happening in this market right now. Some things are, I call it smoke and mirrors that are going on here today, okay? I'm going to show you a little smoke and mirror action. I'm going to show you, we're going to talk about, is a day like this real? Is there anything that can be taken from a day like today? And some news that broke here today that I want to share with you guys. That is a turning point in the stock market collapse, which we know how devastated the market has been this year. It has been pretty much the roughest year about ever in terms of the first 5 months of the year. We all know that. And a lot of people are wondering, like, are we getting to that turning point yet? Is that happening? So I want to share some thoughts about a day like today in regards to that, okay? So first thing I want to start out here is looking at the NASDAQ. So NASDAQ has just been in a vicious down cycle this entire year. It came back for a bit there, but then it was just down, worse than ever, right? Has a good day finally today, 1.5%. And, we're looking at this and everybody's like, oh my gosh, finally can we breathe for a day? And I got to say, when you're just in one of these incredibly vicious markets where the market just seems to go down day after day after day after day, week after week, NASDAQ's been down 7 straight weeks. I think the Dow has been down 8 straight weeks. I mean, that's almost 2 months of just straight downward action in the market, right? I mean, it's like, can we get a breath for a minute? Like, please, can we just... it's like you ever swim in a pool and you're trying to swim underwater for a long time and it's like, oh, you just got to come up and get some breath, right? That's what a day like today feels like. It's like, just give us a break for a day. Can we at least have a day here? That's just been insane, right? The Russell's having a green day as well, which we all know how bad the Russell's been hurt. The Dow's having a great day, 2%. You might say, what in the heck's going on here? This is a little strange. Why is the Dow having such a great day here today? Why is it outperforming the other indexes? Well, I'll show you exactly why this is happening. Look no further than JP Morgan stock here today. I have a little banking watch list, essentially, of a few of the biggest banks out there. This stock's up over 7% today. An incredible day for JP Morgan. JP Morgan's a $300-something billion market cap. So if that baby's moving like that, it's going to help bring up the entire Dow, essentially. But it's not just that. It pulled Bank of America along with it. Bank of America's up 6% plus today. Bank of America is nearly a $300 billion market cap. Wells Fargo, everybody's least favorite bank, almost this one's over $150 billion market cap. This one's up well over 5% today. And why are they up so much today? Well, this is a reason. JP Morgan came out today and they said the U.S. consumer is doing just fine. They say, America's largest bank expects credit losses to remain low due to higher cash balances, they're saying, okay? So essentially, everybody took this as obviously great news for JP Morgan and for the banks here today. And that's a group that's been hit pretty darn hard, to be quite honest. Now, here's the thing I think is very important for everybody to understand about this, okay, is when it comes to credit losses, especially, right, everything's fine as long as people have jobs. That's what this whole game, at the end of the day, comes down to jobs. It always has and it always will. Do people have jobs? If people have jobs and unemployment's super low, credit is not going to be an issue. But as soon as that shift changes and all of a sudden you start getting people laid off and people lose jobs, things like that, that's when that credit card's not paid. That's when that auto loan's not paid. That's when that rent's late. That's when that mortgage is late, okay? That's when you get in that cycle, okay? And so, yeah, if unemployment stays at 3 to 4% for, the next 5 years, and believe me, credit losses will be low in that sort of environment. But if all of a sudden unemployment goes to 4%, 5%, 6%, 7%, that's a whole different scenario. And as soon as that shift happens, if that shift happens, which I think is a pretty decent probability, and the reason being is companies are just not nearly as profitable. And when you're a public company, especially, which most big companies are public companies, you have to make profits. Like, that's what's expected, right? And so you can't have your profitability going down and down and down. Otherwise, your board of directors is going to be on you. And you know why your board of directors is on you? Because the investor base is going to be on you, right? And the investor base is who decides the board of directors. The board of directors who decides the CEO and the CFO of these companies, right? And so a lot of these companies could go and they say, well, where's their biggest expense usually? Almost always their biggest expense, their biggest controllables is workers, employees. And so you can get into an environment over the next 6 to 12 months where you get a lot of job losses. You get a lot of job losses, the credit losses they're going to spike up. That's just the way it is. And especially if you're in an environment where the business cycle is not booming, because then those folks that maybe get laid off from that company or whatever, they can't find a job out there at that time. So it's a very different environment than what we've been in for the last many, many years now, where people could, get fired from a job or laid off or just easily find another job like it's cake, right? That sort of environment is been a little unrealistic when we've kind of gotten a little, I guess you can say, what's the best word for it? A little spoiled, right? Where you can just lose your job and go easily get another one. Those days could be coming to an end. As somebody that started in the workforce in 2008, 2009, I know how hard it was to get a job, any job, right? And I saw people that had college degrees trying to get jobs just to, $30K a year, just to put food on the table, right? And that's what happens when you're in a recession, and especially a vicious recession like that one was. And I'm not sure we're going to go into in one of those sorts of recessions, but here's something kind of food for thought there. And so, you can't get too darn excited about, that whole situation there, okay? Now, you look at the heat map, and there's something very, very interesting that's going on today, okay? Something very interesting. First is, the biggest company in the world, Big Daddy of them all, Apple. Well, it's been between them and Saudi Aramco lately, but Apple up almost 4% today. This stock's having a great day. I mean, it's pulling it's trying to pull almost the entire market up. And you look out there and it's like, man, can't find anything better than it. Can't find anything better than that stock here today, other than obviously the banks, right? The banks have just been tearing it up today. And so the banks are doing great. Apple's doing great. Microsoft's doing great. So the biggest of the bigs having a comeback day here today. Also, if you look at retail, you got Walmart having a good day. Costco's reporting earnings later this week. We'll see what happens there. We'll see. Costco's such a great company, but the one issue I'll say about Costco, the great thing for Costco is they have huge pricing power. The one bad thing for Costco is that it's a company that's 100% dependent upon price, right? And so the thing with Costco, if they go up 10 cents on a case of water, everybody notices that, because everybody's so price sensitive that shops at Costco, even though a lot of people that have money actually shop at Costco. But that's the whole thing about Costco, right? So if that roll of paper towels is all of a sudden 50 cents more expensive, people are like, oh, wow, what the heck's Costco? You're going up on price? What's up with this, right? And so that's one thing I will say about a Costco. And Costco, in terms of a lot of profits, that's usually helped by all the silly things they sell. I don't want to call them silly things, but like random stuff that they'll have throughout the store. The next thing you know, you're putting in your basket that you never had planned to buy that, right? You're going in for specific things, maybe some drinks, maybe some food items, right? Maybe some, like toilet paper, paper towels, tissues, things like that. But then next thing you know, you're walking down the aisles and there's all this random crap, and you're like, oh, look at this blender over here. Oh, I might use this blender. Let me get this. And that's when people are feeling good, right? Those things sell very, very well. The amount of money I spent at Costco or Sam's Club over time on buying stupid stuff that it's just like, you're walking through the store and it's like, oh, I never had anticipated buying this, is a pretty large number. And that happens for a lot of folks. But that's all fine when people have extra money to spend or when they're feeling confident, right? If you flip that situation, those sales aren't quite happening. So there's something to kind of keep in mind there, okay? Now, when I saw that, I saw Apple doing great. I saw those banks doing great. I thought about Berkshire Hathaway. That was the first stock that kind of came to my mind. And the reason being is Berkshire Hathaway is usually a huge invest into the banks. And if I recall, I think they just invested more money in Citi recently, which I think that was up like 7% today. But obviously, Apple's their biggest position. So that one just kind of came to mind, is up 2% here today. Now, look at this, okay? This is kind of a bubble map here. And interesting, Deere, after the bad day it had Friday, coming back with one of the best stocks in the entire S&P 500 today, John Deere. And that's pretty interesting. And you look at Ross Stores, that one's way outperforming. And then you got Take-Two Interactive way outperforming. But, obviously the financials are just really, really just having a great day here today. It's a financials day to shine. This is a Dow chart. Now, what was interesting about this, by the way, JP Morgan by far and away the best Dow stock here today. What was interesting to me is the second biggest lagger I could find is Home Depot. Second biggest lagger. Home Depot is just... The numbers have been extraordinary at Home Depot, but they just can't get out of their own way when it comes to stock price. And, I got a housing watch list. Here's the deal. No one believes in housing for the next year. and I don't blame them. I don't believe in housing for the next year. I think the story is just going to get worse and worse and worse with housing for the next at least 6 to 12 months. I don't see it getting better. I only see it becoming a worse and worse story, where it goes from these incredible numbers to like, oh, these numbers aren't so incredible anymore, to like, oh, these numbers are bad. And that's why in Wall Street's telling you the same exact story essentially. Look at RH down 3.5% today. CCS down 2.5%. Toll Brothers down 2% plus. Toll Brothers has earnings, I think, in about 24 hours from now, if I recall. Okay, we'll hear what they have to say about new orders coming in. And the worst part is, I think that's just a start. I think it's going to get a lot worse over the next quarter or two. KB Home down over 2%, Rocket down 1.5%. Almost everything housing related down. Lowe's is trying to eke out a gain today. We'll see if it holds by the end of trading. But here's the deal with housing. No one believes in this. Everybody expects this to get worse. And when everybody just expects this to get worse and worse and worse, there's just no buyers for these sorts of stocks, and you can continue to get them to hit new 52-week lows and new 52-week lows, because who wants to step in housing right now? Like, seriously, who wants to step in housing right now? I don't know anybody that would want to step into those stocks right now, even at 52-week lows, because no one wants to step into a story where they know it's going to get worse for at least probably the next year. And with housing, you never know how far it can go. You never know if it can go down for years, with an S at the end of it, right? And I'm not going to predict that, but damn, I'm going to predict that housing is going to weaken considerably over the next 6 to 12 months. We're already seeing it start to play out. And so no one wants to play those stocks. Heck no. Everybody's looking at those and like, dude, nah, maybe talk to me in 2023 about housing stocks. And maybe at that point, if these babies continue to go down, maybe then it's worth kind of jumping in. But no one wants to step in those right now when everything is just expected to get worse quarter after quarter, month after month after month right now, right? One of my favorite things to track right now is lumber. The only thing that's doing worse than this might be honest stock. When it comes to lumber, down 41.5% in the past 3 months. Lumber is getting absolutely devastated, and this goes back to housing once again. No one believes in housing. Guess what? Lumber is not going to do well in that sort of environment. This is a horrible sign. This is a horrible sign. Okay, Cathie Wood's ARK Invest is down today. It's down I've seen it down like 1.5%, 1% today. At this particular screenshot is down 1.27%. The reason this is such a horrible sign, and by the way, this is most of our other biggest investments in the ARK fund. The reason that's such a horrible sign is when you have the indexes really green, like today, you have to have a green day. You can't, for an ETF like that, you can't be red. You can't be red if all the indexes, if the Dow's green, Russell's green, Nasdaq's green, S&P 500's green, you can't have your ETF red. No way, man. No way. And so, the only way you should be red on a day like today, if all the indexes are green, is if you're short the market or you got put options. Outside of that, you should, this is one of those days you gotta get a green day, and especially you're down 1.5% or so. That's just that's just not ideal. And so if you're thinking about Cathie Wood and kind of this looks bad. A day like today looks bad when folks look at that and like, you're having a red day when everything's green. Like, what are you going to have when it's a red day? Like double, triple, and that's just the predicament Cathie Wood and ARK Invest is in right now, where these stocks just can't get a break anywhere. No one's excited to buy these stocks at all. Okay, something else I saw that is a little more bad news here, big tech. So here's the deal. Tesla's underperforming the market today. Facebook's underperforming the market today. AMD's underperforming the market today. PayPal's underperforming. Intuit's underperforming. Nvidia's underperforming. And these are significant underperformance. Netflix is red. Shopify's red. And Amazon's red today. Okay? And so what that right there shows you essentially is there's still no appetite for big tech stocks in this market, outside of maybe Apple and Microsoft on a given day, right? But outside of those two big dogs, people still don't want to take any sort of risk in Shopify, any sort of risk in Netflix, and Tesla, Nvidia, AMD, any of those stocks, Amazon, the great Amazon. No one wants any piece of those stocks right now. And the reason being is people still feel, investors, and when I say people, I mean investors, Wall Street, they still feel like those stories are going to get worse over the next 6 to 12 months. And I gotta say, I kind of agree. I think all those stories will get a little worse over the next 6 to 12 months. Now, as a buyer in the market, doesn't mean you can't start to step in and buy these stocks if you think they're significantly discounted and you think they're great pricing. I've just started recently stepping in buying some Amazon shares, which, me, I never am an Amazon buyer, but gosh, these shares have gotten significantly discounted. And I look at where the company's going over the next 3 and 5 years, not over the next 3 and 5 months. And so I've actually started to step in and buy some Amazon stock now. And so I think if you see some deals out there, you got to take advantage of those opportunities. But it doesn't take away from the fact that almost all those stories will likely get worse over the next 6 to 12 months for every single one of those companies. Every single one, and including even Tesla Maya. So that story will get worse over the next 6 to 12 months than it's been in the past. The Shopify story will continue to get worse. Netflix is going to probably continue to get a little worse, but not dramatically worse. And so AMD, NVIDIA, those stories will get worse over the next 6 to 12 months. They're going from like this ultra hype excitement cycle with these great growth numbers to that's just going to be coming down and coming down. And so, that's kind of the situation. You're going from a lot of excitement and these incredible numbers to the stories just kind of get worse and worse and worse. And that's why these stocks can't even keep up with the indexes on a day like today, because Wall Street's just like, nah, we're not jumping in those when the story's just going to get worse for the next 6 to 12 months for those stocks, right? And to echo that sentiment, I did this poll on my Instagram, and this is obviously just retail folks following me. This isn't like Wall Street's doing this poll. This is just retail investors, right? And I said prediction time, red or green week for the stock market this week. And obviously, there's more people that are bearish on the market than are bullish on the market right now, and even from the retail side. And so I think what that shows you there is ultimately there's just a disbelief in the market right now that this baby can go up. And I understand that. And the reason I understand that is because we've had 7 straight weeks of the NASDAQ down. We had 8 straight weeks of the Dow down. And when you just keep getting punched in the face, you just think you're going to keep getting punched in the face, right? And that's just the way it is. And so, I kind of understand the pessimism in the market right now from the Wall Street side and from the retail side. Because Wall Street's looking at it from the next 6 to 12 month numbers, and they're like, I think all these companies are going to get worse. The story's going to get worse. And then from the retail investor side, they're looking at this and they're like, I just keep getting hit and hit and hit. So I got nothing to be bullish about right now. And so that's why you look at something like the AIA investor sentiment right now, and it's been overwhelmingly bearish for quite some time now. And that's exactly why, right? Now, you look at something like the retail trader investor list I have of these stocks, and look at how many are red today. On a day when it looks like all the indexes are going to be green, the majority of those stocks are red. The majority, and all these other ones are underperforming. The only one that's outperforming is a Chef today, and that's it. Palantir's back under 8 again. And so what this shows you here, when you look at these retail trader investor stocks here, is there's just no excitement from the retail side specifically. And so you're looking at the moves in the market right now on a day like today. You're not getting any real positive momentum in big tech, which means Wall Street's not really ready to jump in. You're looking at retail trader investor stocks. The majority of those are red on a green day. Those folks aren't excited. And so you're looking at this and it's just like, and so the question is, what can you derive from a day like today? And the answer I have to you is actually a day like today is actually bearish. It's kind of like a foul ball. It's hard to really go either way in this scenario and say a day like today is really bearish or a day like today is really bullish. I kind of call it a foul ball, which in baseball is, when the ball doesn't, stay inside the lines between the first base and third base, essentially. And it's kind of a foul ball day in the market today where just everybody's looking and they're like, I don't really know where this market's going. But I would tell you, if I had to lean one way or another, a day like today is actually more bearish than bullish, even on a green day, because I'm looking at the pricing action in these stocks and it's just disappointing. I guess you can say very, very disappointing. As far as me, me, I'm staying focused on long term, buying companies I love for the long term. So hope you guys enjoy this as always. If you're looking to join my private Discord chat, my private stock group, get access to all the course curriculums, become a member in there with the other 6 and 7 figure members, check out the description area. You can apply there to become a member. Okay. Much love as always, and have a great day.